All right, so now that we have the Fed rate cut behind us, let's take a look at an industry that is just known to be very interest rate sensitive, and for a good reason. This is the real estate sector SPDR ETF XLRE. And you might wonder what is happening here, that after the rate cut, it turned lower. Let me go over to a daily chart and show you that here. In fact, it's been trending lower for several days here. So what exactly is up with this? So you would think that a rate cut would benefit these real estate stocks and REITs, but what has actually happened is, along with some defensive sectors like consumer staples right here, you see kind of a similar thing happen. It ran up and then was trending lower prior to the rate cut. Now it's up a little bit today, unlike real estate, but you do see that in the initial days after the rate cut, this too did decline. And clearly, with something like consumer staples, a defensive, or let's go back to real estate here, there was quite a run-up in anticipation of the rate cut. So you see, it was already baked in there, and now there's some profit taking. But what is likely to happen here? So if bond yields decline, especially on corporate bonds, which is likely to happen after a rate cut, then some of these income-producing equity sectors like real estate may be better alternatives than bonds. So it is pretty likely that we will see this run-up continue. Let's take a look at another subset of real estate, which is home builders. And here's the home builders ETF. Let me check that ticker here, ITB. This is the iShares Home Construction ETF. It's actually the largest of the home builder ETFs. You're seeing that run up there on a daily chart, but let me show you this on the weekly. And you can see this one is actually extended out of this most recent base right here. And I'll talk about how some of these stocks are extended in just a minute. But when it comes to this ETF, you've got some familiar names here. If you track this sector, you've got D.R. Horton, Pulte Group, Lennar, NVR. Those are all the top components. Now, home builders should benefit from falling interest rates. But let's go over and take a look at these charts. So here's Lennar right here, and you're going to see something pretty familiar. This one just recently broke out of a little consolidation, and it is reversing lower. So this one could be offering potentially more of a buy opportunity than some of these others we're going to look at right now. Here's D.H. Horton. Okay, same kind of thing here. It pulled back on a daily basis, got support right there at that 10-day moving average. Good to see. Again, that could just be some profit taking after a pretty good run-up. Let's see, here's another one, NVR. There's the weekly chart of NVR. And once again, you see kind of getting a little extended. Let me go over to the daily. So they're all reversing lower today. Probably just a little bit of a bout of profit taking to kind of close the week out after this run-up in anticipation of the rate cut. Let's see, what other ones do I want to look at here? Oh, Pulte Group, PHM is the ticker. Same thing. Now, this one is pretty extended beyond this little recent pullback to the 50-day moving average. So keep in mind, the home builders have been on a strong run for about 2 years, despite what was happening with interest rates. And some of these, as we just saw, that broke out, ran up to new highs starting in July, well, it's probably not the exact time for most investors to be jumping in on these right now. When you see these stocks that are extended in this way, generally the better idea is to wait for some kind of pullback, maybe support at a moving average, maybe even just a full-fledged new base, a constructive base that forms that could offer a new opportunity to get in there, because down the road, it does seem that the lower interest rates will probably benefit this business. But like I said, the rate cuts were already baked in after a big run-up. And in fact, there was a Bank of America research note that pointed out that these rate cuts were indeed already priced into the housing stocks. So there may not be an immediate opportunity here until a pullback, but this is a broader sector, XLRE. Let me go back to that, as well as home builders or any of the real estate related subsectors could be worth watching. All right. Thanks for watching today.